Welcome to Markets Now. I'm Michelle Rook with Garrett Toy with Ag Trader Talk. And we did see mixed trade in the grains after the USDA reports on Thursday. And Garrett, let's talk first of all about corn. A nice rally there. It was a fairly bullish report for the corn market, but how much higher do you think we can go now?
Yeah, absolutely. It was a bullish report. Corn acres came in about 1.7 million acres below the trade guess. Corn stocks came in about 100 million bushel. I think the market reaction was more of a function of we were just a little bit too cheap coming into the report. Down at 4.25, we'd sold off into this report, one of the bigger sell-offs into this report that we've seen on record. So these new shorts are kind of covering in here. As far as upside, though, I've seen comments, well, the market rallies, the corn market's trying to buy acres. No, we're not. Because in reality, with these acres and assuming a 177 type yield, flat demand, you're still looking at like a 2-1 carryout next year. So the carryout's still going to be fairly burdensome. 450, and then you've got technical resistance around 462, 463. I think that's probably where things kind of stall out. Above 450, we haven't been there in almost a month. We on the front end, give an opportunity for farmers to get caught up on sales.
Yeah. Quarterly stocks, when you look at the percentage of stocks on farm, up 24% from last year, we got a lot of corn to move, don't we?
Yeah, the situation got worse in corn and soybeans. And the DS1 stocks, you could attribute it to the wide carries at harvest and people deferring sales. But I think this further compounds the issue with just lower prices, considering the sell-off that we had. It was going on in December, but it accelerated in January. So, that being said, what that tells you, commercial stocks are relatively tight, but they know that the corn is out there, obviously. You may see some localized basis support as they try to originate their local demand. The amount of corn on farm is not necessarily conducive to a flat price rally, but it may support spreads short term. But the end user, they know the corn's out there. Probably puts the Sep-East corn spread under pressure here because they know that corn's got to move before the new crop harvest, barring any sort of weather issues, obviously. And then, once you get into July, then obviously we're playing picking up pennies in front of a freight train as far as basis is concerned.
Yeah. But at least technically, we were finally able to close above the 50-day moving average. That's been stopping us out for a while, hasn't it?
It sure has. And we've got a 3-day weekend now to kind of, think about things and where we want to go. First close above we had, last week we had closes, but we failed to hold, this 475 area on D's corn was an important area that kind of acted as a wall that told me that, we were seeing some sales there on D's corn. But yeah, 50-day moving average is important. And once you get through these, the 100-day is still a good 15 cents above the market.
Soybeans ended about a penny lower, but certainly even with the increase in acreage, I know you thought the report could be a lot more bearish than it was.
Yeah, we ended up posting a doji today. We managed to close right above the 50-day moving average as well. The candles look a lot different because of the stops being run ahead of the report. Obviously, I think the market was kind of positioned for a bearish report and didn't get one. My concern always, like I said, is when we have a tight margin year with lower prices, the option is to plant beans because it costs less to produce. And that always creates the risk of a surprise at some point. We didn't get it, came right in at trade guess. Stocks are a little bit higher than expected, so it's not anything to get too worked up about. So we'll probably turn into focus back to South American weather and how these Brazilian production estimates continue to kind of creep lower.
Yeah, although you do have some pretty big disparity. We got to get that rectified at some point, don't we?
Yes, my contacts in Brazil suggest that CONAB's kind of being a little bit political here, and that the USDA numbers are probably a little bit closer to true. Because you look at last year, CONAB is yet to revise last year's production numbers, and even though we know that they are larger than what USDA, or excuse me, what CONAB has printed.
Yeah. So you mentioned soybeans being able to close above the 50-day or being above the 50-day. We're also going to have a higher monthly close. Is that important in your mind?
It is. The big thing is the other thing is consideration. Decent closes because it was month end and quarter end. When you bring up the monthly closes, so yeah, it was a decent month, a higher close. It was fairly significant that we've seen buying on the weekly, or excuse me, on the monthly charts. We held the 100-day moving average on the monthly chart 1135, and we're right here at the 200-day moving average 1172. So it's a positive sign. We're holding the levels that we need to, because obviously $11 is an important line in the sand pivot point.
Absolutely. Wheat, did you have any take homes or takeaways from the report for the wheat market? And overall, we're up for the second week. Have we kind of turned the corner, you think?
I think so. The stocks report, looked like the farmer sold a little bit more stocks. Commercials are fairly well covered in here. The one thing I did notice is that, when China's out here canceling soft red wheat cargoes, you look at U.S. wheat versus the rest of the world, we were very expensive. And since that reset, 3-4 weeks ago, U.S. FOB values have eased, flat prices have eased, and we're not expensive anymore. So we're more in line with world values. Now, obviously, Russia's trying to push out wheat ahead of their new crop harvest, and that's pressuring some things. But I think with the U.S. values being closer to world FOB values, then we're probably closer to a bottom, in my opinion.
Well, that would be good news for that market. What about cattle? Not the best week, especially this start, trying to digest the cattle and feed report, bearishness, the HPAI news in dairy. Did we overdo? Do we have all the bearishness worked in, you think?
We've had higher closes the last 3 sessions after the avian flu announcement. Broke that announcement was enough to break through the 200-day moving average, and that's obviously the target. We almost came close. The highest day were at 180.55 in the June, and the 200 is at 180.71. The way we're holding in here, the way I kind of view it is that cattle got punched in the mouth, and when you get punched in the mouth, you kind of stagger around and get your bearings again. The market's got a lot of damage that needs to repair, and I think they're in the process of doing it. I think, cash is a little bit softer here today, but it's still at a premium to the market.
Yeah, I was going to say the fact that you've got the futures at a discount, that should put some support in here beyond the technical support we kind of bounced off of, right?
It should be supportive to the spreads, in my opinion. April, June should be supportive, but the spread really hasn't done much at this point. It's basically doubled in value from like 250 to around 5 here in the last week to 10 days. But, it'll at some point it should do something.
All right. Thanks for joining us. Garrett Troy with Ag Trader Talk. That is Markets Now.